Welcome to another video. Today we will be making some market breakdowns and I will be sharing some free education and analysis that will be very valuable. Now, if you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform as well as running an educational company in which I teach my students how to swing trade with my strategies and together with me. Now, without further ado, let's get straight in the video. Okay, so let's start from the monthly time frame of GBPJPY. So the first thing you clearly see from the monthly time frame is that the market has created all of this very impulsive move to the upside, going to retest this area of previous support, now turn resistance. Now, as you know, there is one thing that you really need to notice here from the monthly time frame. In all of this impulse to the downside, from this high here to this low here, there's one candle that is not related to the move, meaning one candle that is of a different color, which is this green candle here. Now, what this shows in the market is that even if the market was extremely bearish in all of this period, one candle changed the color, meaning that the market found some support around this area. Meaning that this area here is a very interesting area for the market that the market loves to respect as previous support now and support again now that the market is coming from above. Now, one thing that you can do, that is a little trick, you can go down to a line chart. Now, if you go to a line chart, what you will see in the market are the closes. All of these angles that you see are closes. In this case, since we are on the monthly time frame, you will see monthly closes, and monthly closes are very important for the market. So let's put a horizontal ray on this monthly close. Now, this area here will be an area of very strong support if the market will hit it again. With this said, let's go down on the weekly time frame and see what kind of price action we're getting. Now, on the weekly time frame, there is one thing that we immediately realize. If you look at the pattern in the market created an overextended W formation. Now, after an overextended W formation, you expect a push to the downside. And in this particular case, since we already know that the market is supposed to find support around this area, this is the area that the market is supposed to hit. Basically, the area that we have just found from the monthly time frame. Now, what we can do, we can simplify the target area by taking our Fibonacci from the low to the high of the impulse. And by doing this, what we will realize is that the 3T2 Fibonacci of the Fib taken from the low to the high is in very close confluence with the zone we have found on the monthly time frame. So basically, this will be the target area, the confluence of the 3T2 and this strong zone from the monthly time frame. Overall, this is what we want to see the market hit. And this is a target that makes a lot of sense because the market made an impulse, then created a consolidation zone inside of this area and then another impulse to the downside. And when the market does think this kind of moves, so an impulse, then a correction, then again another impulse to the downside, the market most of the times goes for the retest of these zones. These zones act as magnet for the market. So we really expect the market to go and hit this area. Now, what happens if we go down on the daily time frame? Now, the price action that we got on the daily time frame is pretty straightforward. The market from this low made a very strong impulse to the upside, followed by a corrective phase, and now the market seems ready to make the push to the downside. Now, why do we say that it seems ready to make the push to the downside? Because the market has broken this counter trend line to the downside. Now, why is this a counter trend line and not a trend line? Because we already know from higher time frames that the market is supposed to make a push to the downside. So this trend line will not be a trend line because it's against the overall trend from higher time frames. So it will be a counter trend line. And after a break of a counter trend line, what we expect is continuation to the target, possibly a retest of the counter trend line itself before continuation to the downside. So I can't share with you the rules of my strategy. You know that the rules of the strategy are part of the mentorship program and all the rules of engagement. We have a very strict series of rules for being able to take the trade. But what I can't show you is that we will be monitoring price action inside of this area for a potential short to the downside. And as usual, we will be reacting and not predicting. So basically, we will be waiting for all the rules of our strategy to be satisfied before we can be taking the short on GBPJPY. And if the rules will not be satisfied, then we will not be taking the trade because we have higher probabilities for the market to continue to the upside. So we will be monitoring price action inside of this area for this potential push to the downside. I suggest all of you to be doing the same with your own strategy if you don't want to learn mine. Okay, so let's speak about GBPJPY. So the first thing I want to speak about is the fact that the market had created this very clear W formation, ending up exactly at a structure level. What do I mean a structure level? I mean that this level here where the W formation had ended was an extremely clear area of previous support here, now turned resistance. So we clearly had an area of previous support, turn resistance, plus the completion area of this W formation. And that is the reason for which I told all of you many times, expect the market to make this push to the downside. And I mentioned this a lot of times on TradingView in my analysis. Expect the market be looking for shorts on the 4-hour time frame for this potential push to the neckline of this W formation on EUR/JPY, because we have a lot of confluences around this area. Now, what has happened? The market went down and it is now retesting this neckline. In other words, a neckline is an area of previous resistance, now turn support. There are basically is the same thing. Okay, a neckline is simply an area of previous resistance, now turn support. And we noticed that the market, when it made this impulse, and went back to retest this area in a corrective fashion. What does it mean? That basically the market created a very strong impulse to the upside with only 2 candles. We made all of this move, and then the market created a lot of retracement candles, meaning that this is a retracement because it is lower and has less momentum than the impulse. So basically what we expect now is continuation to the upside for the completion of this impulse, correction, and impulse pattern to the upside. So overall we want to see continuation to the upside on EUR/JPY based on the weekly time frame. Now what happens if we go down on the daily? Now down on the daily, we had spoken about the fact that the market was supposed to make this push to the upside already last week. However, if you remember on TradingView, I told all of you guys, expect the market to move to the upside only if we will break above this resistance level. Because it's pretty clear that we had very strong support here, support here, support here. Then the market broke to the downside and all of that support is turned resistance. So before we could be looking for longs for the completion of the ICI move on the weekly time frame, we needed to wait for the market to break above this level, and then on the retest of it, then we could have been looking for longs, but not until the market is below an area. And this hasn't changed because the market has respected this area as new resistance. So what we need to do before we can be looking for longs is to see the market break above this area from a daily closing perspective. So we need to see an impulse above this area, closing on the daily time frame above it. Then on the retest of this area, then we will be looking for a potential valid trading opportunity on the 4-hour time frame if all the rules of our strategy will be satisfied. Only if all the rules of our strategy will be satisfied on the 4-hour time frame, we will be looking for a potential long opportunity on the 4 hours, because the market will have created this W formation. So we will expect this pullback, and here we will be looking for the entry, and this entry will be the entry with the highest probability and the biggest risk to reward. And in the end, trading is all about probabilities and risk to reward. Now, what about the target? The target is pretty simple. This will be the previous weekly leg. If you go back to the weekly time frame, this will be the previous leg. So basically the retracement leg. We have seen it before. So if we take our Fibonacci from the low to the high, you quickly realize that the -27 is at this area. So what we will be targeting as a target is the -27 of the previous weekly leg, so the retracement leg. And this will be a very nice target, but as usual, trading is reactive and not predictive. We need to wait for this to happen on the daily time frame before we can go down on the 4-hour time frame to look for a potential valid opportunity. And if it will come on the 4-hour time frame inside of this area, then we will definitely be taking the trade with a very good probability and a very good risk to reward for this push to the upside. If the trade on the 4-hour time frame will not present itself, it means that overall the market is continuing to move to the downside and we will not be taking the trade. But overall, it's always about reacting, probabilities, and risk to reward. If you enjoyed the video, make sure you smash the like button and let me know in the comments below if you actually enjoyed the video, and also if you didn't, and what you think I can do better to provide more value and more free value in these videos. Now, if you still haven't, make sure you go check out the mentorship program. It is a very complete program. I teach you all the rules of my strategies, and then each and every day I answer all of your questions in video format, as well as guiding you with daily market breakdowns, showing you how you're supposed to apply the strategies to real-time market conditions. So make sure you go check it out, and I will see all of you in the next video.